But so basically, the thing that I think a lot of people need to be thinking about right now is rebalancing their portfolio. So some people, they invested in crypto on top of these other things. Some like commodities like gold, equities have done well, and real estate I think is one that needs to be brought back into the equation. So maybe Paul, do you want to kick off that conversation?
Yeah, sure. Yeah, it's been sort of like the everything asset bubble, right? Everything's gone up and valuations are historic highs for gold, recently Bitcoin, the S&P 500. Real estate's already kind of seen its decline, and some of the headlines I think we'll see this year will be along the lines of distress and some assets that may end up in foreclosure or taken back or sold at discounts to even what the loan balance is. But I think that's really, those headlines will be sort of yesterday's news. A lot of that stuff as a result of decisions and acquisitions that were, done a couple of years ago. So I'm actually quite optimistic. I think, rates seem to be stabilizing a little bit. The 10-year moving in the opposite direction of the federal funds rate did not help. Sorry there. But I do believe that there's a little bit more certainty. And, if that 10-year starts to go down, like historically it does in tandem with the federal funds rate, I think we'll start to see sellers come back into the market and we'll see more transaction volume. And I think today, if you get stuff at a good basis and you can protect the downside, it might be that there's longer hold periods and lower returns than we've been used to over the last couple of years. But, that's real estate. Real estate's kind of boring, right? It's supposed to be like sort of your steady Eddie asset class that provides cash flow. And what we saw back in 2020 and maybe a little bit sooner than or earlier than that into 2022 was an anomaly.